Good day, all. Ira Epstein of Linn & Associates with your metal market update for Tuesday, the 29th of June, 2021 at 5:45 p.m. Remember that tomorrow's Wednesday. The invites have been sent out if you're on my mailing list to join me in my live webinar, which will open at 12:15 p.m. Central Time tomorrow. And it begins at 12:30. I do not post these webinars. If you haven't got the invite for whatever reason, you can always click the icon you see up here during the show. That way you get right into the area, fill out what you need, and I'll see you tomorrow at 12:15. But in the meantime, please send your questions of markets that you'd like me to cover. It could be futures, spiders, ETFs, to iEpstein@LinnLLC.com. Pretty simple, and Linn is Linn, then LLC.com. Okay, so the dollar today moved up, not dramatically, but moving up. So we're starting to say maybe the market's going to start back into an uptrend here. Who knows? I look at the market as that pressure on all the metals. Copper fought hard today. It was down a lot more, and it made back a lot of the gain, but it's still a market that's under pressure. Why? Well, you've got a lot of things going on. You've got China talking about auctioning off some of the base metals, including copper. Russia's putting on a tax starting in August on aluminum, copper, and its base metals between August 1st and the end of the year, December 31st. So you're seeing a lot of things happen. What Russia doesn't want to do is let the metals out of the country. Why? They claim they need them for defense. Bonds and notes flying in the face of the dollar, they're not adding to yield. It is confusing, and that's because you've got the elephant in the room, the U.S. jobs data report coming out on Friday, and before that you get the ADP report and the Challenger number. So we're going to see just what the markets are looking like, where the job growth is, how strong it is, and what does that mean for interest rates, the metal markets, and the stock market. Also, we're coming to the end of a month. We're coming to the end of a quarter. So always remember that money now has to get new placement. Books get balanced. It's called window dressing. Just pay attention. On the weekly chart, the last break low was right here that I told you. And if this market gets down and under that low, and it's right here, let me give you the settlement, on a closing basis, 1767.70, and it is under it right now by $6, that would be an ugly picture. You really need to get back over 1789.30. Otherwise, if it just finished as it looks now, I'll be looking for lower prices, certainly for a test of the most recent low, unless some other chart action would happen in there. This is a breakout of that sideways action that the market had had. Now, how much leg does it have to the downside? When you look at the swing line, and this is that chart, same chart without the swing line. Here it is with the swing line, and I brought it up a little so you can see it. Lower highs, lower lows. You have to get over 1791 in order to negate it. Doesn't that tie in with that 1787 number I was just talking about, or 89, right in that zone? Yeah. Now, remember, we had a bearish crossover where the 18-day average got under the 200. It is now racing to get under the 100. So chartists that teach people like I do, and they teach them moving averages, one of the most bearish patterns you get is when a short-term average is underneath a medium term, I'll call the 100, and the 100 is under the longer term, the 200. If it gets under there, it's going to be an ugly looking chart, way uglier than it is now, and folks, it's ugly looking right now. Where could it be going? Didn't we just say near that 1700 level? Your lower Bollinger Band's there right now. So we're going to be looking, at least I'm looking, for this whole area here to be a possible target. I just don't see anything unless the jobs data surprises the market, and that's always a wild card. This is a big jobs data report. Sometimes we look at them, I don't even pay attention to them most times. But as we're coming out of the pandemic and people are worrying, oh, when are people going to be looking for jobs? How many retired? Is that ever going to get filled in jobs? There's a lot of questions, and the Fed's looking at it, so you got to pay attention to it. Slow stochastics are embedded. That tells me on rallies, the pros are aggressive sellers until the red line closes back over 21. When I look at the gold-silver ratio, just sort of laying here. They're just traveling together in a downtrend right now. But silver's not as bearish as gold. Number one, it's got a higher high and a lower low pattern. But, and there's a big but here, you can't count tonight, so we won't look at that as being stochastics. But both numbers in terms of Tuesday's action were under 20 and the day before. Tomorrow, if you have a bad day like you're having right now, you get another embedded reading. Again, that's another nail in the coffin, saying maybe the 2,500 area is the next zone. Markets also, because it's breaking, getting resistance at the 200-day, the 100, and the 18. And similar to what I said, look at how the 18-day average is slipping. It might get under by Tuesday of next week, I'm figuring, could be underneath that 100. Then the key is what happens with the 2. The difference here is the 100-day average is above the 200. In gold, it's not that way. In the copper market is fighting at the 100-day average for support. Market is flat in momentum, no trend. You got a higher high, lower low. Whenever you're under the 18-day average, I teach that your bias should be down. If if you like to learn everything I teach, I have a charting course. It is not expensive at $249. It's on our website under the word education. And it's a great way to learn these concepts. But when I look at that, in my brain, no matter how the chart looks, I'm not looking to be a buyer because the bias is still to the downside. In the platinum, same thing. Bias has stayed down, and it has been down here since May. And it's just staying all that way through. And I'm talking early May, but it's not in a trend. It had what we'll call a contra-trend rally, couldn't quite get to that 18-day average, and now is plunged on the market again. And in the palladium, a little stronger. It's coming up, but it's the same thing. It's having lots of trouble at this 18-day average that keeps the market, if you will, from going higher. I call that the line in the sand. For those of you who've been watching me a long time, you know that I really believe in that, and it's what it's been doing. Next, the dollar index. So let me explain what this dollar index did. You had an embedded reading and you lost it, and you lost it right here when the market closed under a 79 reading and it didn't get it back the next day. Most times, I'm not using the word always, it wouldn't be accurate, the market will fall down to one of the major averages. In this case, it's right here. At first it was 91.47, now 91.46. It made a run to it, but that's not hitting it. This proves wrong, and the market can get very crazy if it gets over 92.39.5, the high that's up there. So I'm waiting to see which way does it want to go. Last on this chart analysis, Ethereum. Think back to this weekend. $20,000, all the writers, Bitcoin going down, this market's going right with it. Well, it's proven them wrong. This market's gone up very sharply, but again, like the other charts I showed you, this is no more than a bear market rally at this point because you're not over that 18-day average of closes. That is your resistance point. Whether you trade futures, ETFs, I cover them both for you first thing in the morning with my morning subscriber videos. Now, the beauty of the two of them is I record the first one at 5:40 in the morning. And I'm giving you, at that point, a lot of news. I'm telling you what, first, the reports of the day coming out for the U.S., estimates, what the reports are. Then I'm looking to see what's going on in Asia. If there's big reports, I'm covering them there for you. And Europe. Put it together, I tell you specifically in the futures, buy here, sell there. Why that way around? Because so many of the spiders and ETFs are based on the futures. So I cover about 40 futures. Then at 8:40 in the morning, I start covering all the spiders in the ETFs, along with individual stocks and a few other things. I cover over 40. We will change this ad so that it's done there and it's accurate for you. The price is inexpensive. There are 6 videos a week for each one, so that's about 24 videos. 5 days a week, it's on the daily charts. On the weekend, it's the weekly charts. I will sometimes mix during the week because I know the longer term traders are looking to do something, and the daily chart makes up the weekly. So if you're looking for something like that for $16.90, you're not committing to a year. You can do whatever you want. A lot of people do want the year, and they want to go with that for one reason. I give them a good discount. They pay up front, and everybody's happy. That's all up to you. Give it a try. I'm Ira Epstein. Go to the website under the word research. Take care.